Let me get to the punchline. The response rate on the October data was quite low, but it's normal for August and September, right? Like, so that's the number that you should focus on. Like, what happened in August? What happened in September? And the revisions to those 2 months totaled minus 112,000. So you can write off October as a weather event, a strike event, whatever, but the trend going into the number was weaker.
Welcome to RenMac Off Script. We're able to discuss markets, economics, policy, history, and life. It is, my God, November 1st. It is November 1st, guys. Like, that's it. Like, fall's almost over, actually. I'm Jeff DeGraff.
I'm Neil Detta.
And I'm Steve Pavlik.
We're going to touch on jobs, the election, S&P internals, a few of the headlines. But you know what I got today? Actually, yesterday. I got and you guys are going to laugh, but it's true. I got the Consumer Reports top picks of the year. And my wife laughs because I will literally bury myself in my office for like 3 hours and read this thing. And then the worst part of it is suddenly we have a $350 Amazon bill because I just start buying stuff that ends up being kind of interesting. So just for reference, the Hamilton Beach 22910 two-slice toaster is the number one pick in the Consumer Reports, I guess, man of the year, if you will, product of the year. But so I've got a label maker coming. I've got a couple flashlights coming. I'm really excited this weekend about what's going to happen. All right. Speaking of excitement, Steve Pavlik, God, make it end. I mean, seriously, just make it end. I mean, maybe that's it. Maybe I'm so interested in, the Energizer flashlight and what it's going to do to my life as a distraction to these elections. What's the latest? Where are we?
Well, honestly, one of the things that's been remarkable, I think, about this race compared to more recent ones is just how close the contest remains heading into Tuesday. Both sides sort of pointing at things with reasonable, I guess, optimism as to sort of why they think they're going to prevail.
Let me ask a question. So, I mean, I was, knee deep, 30 years old or whatever in 32 in the 2000 election, which obviously was the closest ever. It didn't feel as consequential as this. Maybe that's from the campaigns and what the rhetoric is. But going into that election, it wasn't this close, was it?
I don't remember the polls. I mean, admittedly, I was a freshman in college when that race occurred, so I was not following it as closely as I do now when I get paid to do it. But that said, just keep in mind the context of a close election. The last two, 2020 and 2016, were, even though electoral college pretty, I guess, decisive. They weren't that close from an electoral college perspective. It was still a small number of states with a small number of voters determining the outcome. And, we've seen usually, I think it would attribute that more towards maybe late breaking momentum to one side or the other, sort of consistent across those battleground states. We'll see whether that holds this time. We don't know what the polling error is going to be. I think there's probably going to be some. We just don't know necessarily in which direction. And I start thinking about how to watch election night and some of these things that may give you some early tells here. I would ignore a lot of the early voting statistics. Both sides sort of see what they want to. Really, it's going to come down to, in my opinion, North Carolina is one of the first states to be called. Usually, if it's not called, or even if it's called for Harris, then that's just going to make it a much more difficult path for Donald Trump. It's just more difficult to see a path for Trump that doesn't include North Carolina. It's not impossible, but it's just more difficult. And I would put Pennsylvania in the same bucket for Harris. I think Harris's presidential pathway is the best one for her, and the easiest one would be this blue wall. If we think about how the three states, Michigan, Wisconsin, and Pennsylvania, They align that way ideologically with Pennsylvania, probably most to the left. You sort of see Harris performing a little better in polls there now. Wisconsin sort of in the middle, Pennsylvania, relatively speaking, of the three, furthest to the right. So that's probably a good way to think about that on election night. And if it's close,
Let me just stop you there. So if Michigan goes to Trump, it would be almost catastrophic for the blue wall for Harris, right? Because Michigan is the most left leaning. Is that what you're saying?
absolutely. I mean, at that point, you're looking at an electoral landslide.
Wow.
And you're also probably looking several Senate seats, presumably going Republicans' way as well. And that could be consequential too, because you think about who those moderating voices in the Republican Senate side are going to be. It's probably going to be Susan Collins from Maine, Lisa Murkowski from Alaska. If you can get to a margin where they're no longer relevant, that could be consequential when you start talking about how big you might go on some of these fiscal packages and other things as the like. I just look back to 2016 when Trump, had the surprise victory over Hillary Clinton. They called Wisconsin earlier in the night. And at that point, the Trump team knew they had won because they just sort of assumed, well, if they had won Wisconsin, they were going to win Pennsylvania. At that point, it was over. Again, Trump was trailing in the polls at the time. That's a similar pathway where, North Carolina needed to be the first domino to fall. That's sort of how I would think about it. And the other caveat, too, we've mentioned this before, I'll just reiterate. North Carolina was hit by hurricanes. A lot of people dislocated. I don't know what that's doing to the polling accuracy, just because I would assume that would have some impact there on the response rate. So I take what you're seeing out of North Carolina with a grain of salt. I just see from where I'm standing that Harris campaign is really putting much more effort in North Carolina. They feel better about their chances there than they do Georgia. I think the scenario, I wouldn't put it likely, but where things get probably dicey is maybe there's a scenario where Harris wins North Carolina and Trump wins Pennsylvania. And that's when you start to set off this scramble to get to 270. And I think that's when you probably see a lot of the recounts in place, a lot of the litigation that both sides are sort of gearing up with on the election front. And that could be, again, the most litigious and probably the one that prolongs the eventual outcome the longest. So that's something to keep in mind as well.
Where is in the Constitution where they have to go to the octagon and fight it out? Is that like part 8.4
don't
A B
I don't think that amendment's been included yet. We'll see how bad things get.
Yeah.
But look,
Well, Joe Rogan would be for it.
yeah, Trump spent a lot of time with him, so we'll-
Right. Right. So, but as if you take the polls right now, just I mean, and I know this is all irrelevant, but I mean, it really is. It's every day is I wake up and it feels like it's the Super Bowl. 2 minutes left. Game is or your team is down by whatever 3 points, and they're driving. Um, if you look at the polls right now, it looked to me like Trump has the Sun Belt, right? In other words, North Carolina, Georgia, from the polls and from kind of the early indications.
Arizona,
He's got
Nevada.
Nevada, and it looks like he has Arizona. It appears that he has I mean, we're talking razor thin, slight lead in Pennsylvania, but not leading in Wisconsin or Michigan, which would be consistent with your call actually, because Michigan's further away than Wisconsin and Pennsylvania. Is that how you see it right now as we go into the weekend, or am I missing something?
No, I mean, I'm looking at the Real Clear Politics average of battleground state polls, and it confirms everything you just said. 538 is not really that different. Um,
But by the way, none of them are over 1%, except for I think Michigan is over 1%, and maybe Arizona.
but to your point, everything's still within the margin of error.
Yeah.
And so that's where it's, at least at this point, with respect to the polling, uh, more historically close, at least in my lifetime, than I can remember. Okay, we'll find out probably on Wednesday how off the polls were and which direction. But at least at this point, it's going to be a nail biter.
Yeah, I voted early, and
Did you vote often?
uh, no, because I'm in Connecticut, it doesn't make any difference. If I were in my home state of Michigan, maybe. The but what was interesting is they had a monitor that showed that close to 40% of the registered voters. This is as of, what was it, two days ago. So as of Wednesday, 40% of the registered voters had already voted in my town.
Yeah, I mean, early voting. I mean, the other thing that I would just sort of, we were thinking about the context here. We're going to get a lot of returns in. There are going to be a lot of comparisons, which in some cases are basically all you can do to the 2020 performance. The other thing that I would reiterate there is we were voting during a pandemic, and a lot of states have changed their ways they allow people to vote since then. Some more, some less. There definitely seems to be, at least in certain states, more early voting options, including in person. And whether you're just simply banking those election day votes, I think it's something Republicans, they've had uptick in a lot of the early voting in-person data. But again, whether those are new voters or whether they're just simply banking the election day voters, remains to be seen. I think Democrats are encouraged by, I guess, larger percentage of women in the early voting, suggesting that, they tend to vote larger percentage than men, that maybe that is a sign of things to come. That's why I just sort of sit back right now and say, you can't really read in too much into this. We'll be able
It's
to
just
now.
more responsible. I mean, every woman I know is more, I know this is a stereotype, is more responsible than almost every man I know. I mean, so they just get it done, they check it off the list and
Well,
they move on.
but if you think about that, and that's one of the big, I guess, risky strategies that the Trump campaign is doing this
Yeah,
time, is they're relying on young men, which as a former young man, tend to be unreliable.
right.
And I think if Harris prevails, particularly in some of these states where Trump's ahead right now, this get out the vote effort and sort of outsourcing it to Elon Musk and others, relying on, again, unreliable voters, maybe one of the things, during the post-mortem that make them up.
Well, they won't be distracted by football or the World Series on Tuesday because football's over and so is the World Series. Neil, you want to jump in on that one? Nice showing.
Oh, well, I mean, it was interesting because they all said it was going to go to 7, and it just wasn't really much of a contest. And
So I heard a
a couple of
stat,
unfortunate collapses too.
unbelievable. I heard a stat during the game when the Yankees, when it was tied 5-5 in the last game. Um, I think Susan Wolman, who's the Yankees color woman, said the Dodgers have 5 unearned runs. Dude, 5 unearned runs in a series is almost catastrophic. 5 unearned runs in a game, you're almost, I mean, that's like having 5 fumbles basically. Like it's unbelievable. Anyway, so I can't believe we've gone this long, but it was payroll Friday and you got second billing, man. Nice. It's like you're 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 the main act behind REO Speedwagon warming up for you. Unbelievable.
I mean, I guess the jobs number before the election is probably the only time we'll kick off with the election stuff first. Right?
It's okay. We'll stroke your ego.
Totally, it's fine. I mean, obviously the hurricane had a huge effect on this number. Month to month changes in the jobs numbers are volatile. That's especially the case when these changes are amplified by hurricane effects. You had over 500,000 people employed but not at work due to bad weather. So that's one reason to be somewhat skeptical of the report, whatever the number was. It came in at 12,000, by the way, for payroll employment. Remember that you don't earn any money if you're employed, but you earn no money over the reference week. You're counted as non-employed in the establishment data, but employed in the household data. So I think it's important for people to understand that. Now, that all being said,
Wait. What? Say that again? What is that all about?
if you are employed but earn no money because
Okay.
you're off the job, you're counted as not employed.
So I'm employed, but my
I mean,
job has been.
if you're off the job, you have to be on the job getting paid to be counted as a payroll employee.
You're on strike.
It could also be the case for the hurricane, right? I mean, if you're not earning money because the hurricane's keeping you from earning money, then you won't be counted as employed. That's just
How regional is this data? Can you see it by?
I can't yet. It's hard to see it right now.
Got it. Okay. Okay.
But let me get to the punchline.
Sorry.
Um, the response rate on the October data was quite low, but it's normal for August and September, right? Like, so that's the number that you should focus on. Like, what happened in August? What happened in September? And the revisions to those 2 months totaled minus 112,000. So you can write off October as a weather event, a strike event, whatever, but the trend going into the number was weaker. So, August was a very soft month. I mean, and if you look at service providing industries as an example, like professional and business services employment, that was down 6 of the last 7 months. That's, to me, is a cause for concern, because you're talking about white collar type office employment. So
Mm,
I don't think you can really blame the weather on that.
right.
And temporary help employment was down a lot. Maybe that's a weather event, but at the end of the day, that series has also been contracting since March of 2022. So, I think there is an issue around breadth. I mean, if you take out education and healthcare, private employment was negative in August. There was a modest rebound in September. Obviously, it was negative again in October. But, it just goes back to the point that even excluding sort of weather factors, you could, the trend isn't really very strong. The household number, as I mentioned earlier, isn't going to be as affected by the weather. The unemployment rate was flat at 4.1%. Part of that was a function of labor force participation rates coming down. But if you look at prime age employment rates, that actually fell 30 basis points at the lowest level since January. So, and the duration of unemployment keeps going up. So once you're out of a job, you tend to stay out of a job. The median on that is 10 weeks, highest since February of 2022. So, I would just say that, yes, the weather, whatever, I mean, was kind of skewed this number, but I think the big story is that, number one, if you thought that there was some kind of an inflationary boom coming out of the September jobs number, you should
Right.
revisit that expectation. Okay.
Right.
That's the first point. The second point is broader labor market conditions are still cooling. That's really the main story here. I mean, if you look at the employment cost index that came out this week, compensation growth ran at the weakest since, I believe, 2021. It's essentially consistent with inflation at or slightly below 2%, given the growth in productivity that we've seen. So there's really no inflationary impulse coming out of the job market. And, I just, I think let's see what the next month brings. But I've been mentioning that, the underlying trajectory in the economy going into Q4, I think, is slower. Income growth has slowed. If you look at real incomes net of transfers, that should weigh on consumer spending, which was really strong in the third quarter. We probably won't see that in Q4. Equipment spending was largely flattered by Boeing activity. We know that that's probably not going to be strong in Q4. And we had a huge run up in defense spending in the third quarter, probably also unlikely to repeat itself in Q4. So I think the odds are that you probably get real GDP growth with a 1 in front of it in Q4. And this is happening at a time when broader labor market conditions have been slowing. So, for a bond market that's, pumped up on boomflation, Donald Trump, whatever else, let's get past the election. But I would say after the election, there's probably a lot of value, particularly in the long end of the curve.
Yeah, we published or we just put on Twitter a series of headlines just because it was so amazing how many negative headlines and the presumption that uh, if Trump wins, it's going to be inflationary. If Trump wins, it's going to be deficits. If Trump wins, it's going to be, anathema to bonds. I get it, but look, and as we've said on Twitter, we don't trade politics. It's really a bad bet. If anything, you want to trade or you want to fade politics. In other words, when the consensus is presuming something, you want to take the other side of it. And this certainly seems to be the case. Let me ask you two questions, Neil. Which campaign will be using the jobs data as you see it? Is this more favorable to Trump and talking about policy, or is it more favorable to Kamala and Bidenomics?
I mean, I don't. I mean, everyone can spin it any which way they want. I
Yeah,
mean,
no, I know, but the truth,
Kamala,
Neil, we're here for the
Kamala will
truth, for
say,
God's
look,
sakes.
the unemployment rate. I mean, you already see it. Like some of these like Twitter shills. Here we go. Justin Wolfers, updated after this morning job report. He just puts out a chart of the misery index. So basically emphasizing the fact that the unemployment rate is at 4.1%.
Right, right, right.
Okay. I mean, but
Economic
obviously
skills.
with a lot of these people on Twitter that interpret economic data, I mean, they're basically, they want it to be that the economy is good. They're going to try to make it look good for the people that they support, right? And so that's what this is about. But I think if you're Trump, obviously you can spin it in the same direction. Like jobs growth is slowing. If you lost a job, it's taking you longer to find a new one. The breath hasn't been very strong. I think, look, I mean, to me, it's just look at the reaction in the bond market, right? I mean, the bond market's telling you that this is consistent with cooling off of labor market conditions.
Yeah, yeah, yeah.
And like that's all you can say.
So the second part of that,
I've always said this, right? I mean, Trump has always made it out to be he doesn't like the fact that the Fed's cutting before the election. He said
right?
that many times, okay?
Yep,
But if you wanted to be smart about it, you would just tell people, why do you think the Fed is cutting? It's not because things are strong
right.
or getting stronger. I mean, things are okay. They're not collapsing, but it's not because things are getting stronger. Things are getting slower at the margin. Therefore, that's why they're cutting. They're trying to protect the economy because it's not as strong as people are making it out to be in many cases. So at any
That's
rate.
my second question. So my second question is, okay, so both sides will spin this to their, obviously to their advantage. But as you look back and you see this number, and now that we have, let's call it 3 months kind of normalization in these numbers, was the Fed too aggressive, not aggressive, or just right in terms of cutting 50?
I think the Fed did the right thing
Yeah.
because,
But you've been taking some slack for that, man. I mean, people have been, have been giving you tossing you some shade, as my kids say, around that. But
take
you
a
are
long
still,
walk off a short bridge, I guess. I mean, if you're not, look, I mean, the people that are throwing shade at me are the ones that, last I checked, were probably wrong about the 50 basis point move,
yeah, no, I get
right?
it.
Like, my job is to make a market call, and guess what? It was the right one.
Right.
So,
All right. So what does this do for the trajectory going forward? Are
I mean, I
you,
think it cements 25s, but for the reasons I highlighted, the fact that the underlying trajectory and payroll growth has been slowing, and the fact
yeah,
that GDP growth is not likely to be as strong in the fourth quarter as it was in the third,
yeah,
there's probably, I mean, to the extent that people were thinking maybe they should skip a meeting altogether in December. I think by the time we get to the meeting, it may well be that the markets are more pricing in 50 than a skip. So I think 25 and 25 is a reasonable base case for November and December. But, look, I mean, it doesn't take much. You need another clunker in employment. I mean, what if you don't get as strong a bounce back as people expect
yeah.
in the next jobs number, and you get some slowing in core inflation? That may, lead people to bid up the front end again. So I just, look, I mean, to me, it's really, if the issue is primarily for me that private borrowing costs are still very elevated. Okay, and I mean, look at what's going on in housing, right? I mean, one of the reasons there was enthusiasm around housing was there was this expectation that rates would come down. And that hasn't happened, not so much because the Fed made a mistake, but the markets overemphasized a data point or two, right?
Yeah.
Right. And so that kind of drove up mortgage rates.
Yep.
And there's sort of this hyper data dependence that's out there. And, and that kind of got the markets going. But, ultimately, if you look at ECI, underlying wage and salary growth, it's slowing. It's just so the math just doesn't work. Right? The math, I mean, a 7% mortgage rate, that's not going to work given what we're seeing in the labor market.
Right.
And if housing is slowing, to me, the weakness in residential investment is just a source of this downside risk for the broader economy. And that's all you can say. And I also don't, as I mentioned, I think consumer spending not not going to do another 3.5% going forward. So
I'm just shocked at how brisk the housing market remains, at least in our area. I mean, I've got a couple of friends that are realtors, and
well, that's a function of where we live, right, Jeff? I mean, we're in the
yeah,
Northeast.
yeah.
You
But
go to
still,
Florida, Texas, which is, as our friend Rick Palacio said, the meat of the market. The inventory situation there is getting worse, not better. And because those two states represent the lion's share of new construction, it raises a significant risk to residential construction going forward because I mean, if inventories are going up in those places, then what's the point of building new homes?
right, right, right. Amazing. Well, in terms of how we're seeing the world, and I will say this is every day. I mean, it's almost I sit here and look at my screens, and it's just you know inconsistency after inconsistency, if you will. But generally speaking, we still believe that we're in a good spot or a good place for cyclicals. We're updating our market cycle clock right now, so we'll see what that says. But that's still in a bullish zone for cyclicals. But honestly, the hard part is things like discretionary, which should do really, really well in this part of the cycle, and they are outperforming, say, staples, which is good news. But they're not outperforming the market yet. They're outperforming staples because staples are so just abysmal. I mean, they're terrible. So, we're kind of winning by default here, which is really interesting because we're not seeing the same type of surge that we would expect at this part of the cycle. Seasonally, things are strong. In fact, we just had another spike in the VIX yesterday. That historically, when it spikes without a corresponding spike in credit is a good sign, and that's what happened. So we're in the top decile there. Might actually be in the top 5%, whatever decile, quintile, quantile, whatever you want to call it, would be there for 5%. But basically, when equity markets are pricing in risk that the credit markets aren't seeing, that's a good sign. So there's a lot of things that are going on that would be supportive of cyclicals. And again, that trade is working, but it's not working the way it should, which is this massive outperformance of cyclicals. It's just this massive continued underperformance of staples. So basically 40% of the S&P is above their 20-day moving average. That's a low number. We've talked about that. Again, not outright bearish, but just says it's a two-step forward, one-step back type of market. We're seeing that S&P at the 50-day, which I think is good news. We've got a lot of support at 5,700. We think we'll hold that. So if we get that or get to that level, we're going to be pretty aggressive buyers. Our allocation model actually started to shave off. I'm reluctant to say this because it's not how I'm thinking about it, but it is what it is because you have to make a call. But we shaved off half our bond position and took that down with that move higher as it just became a pressure point on our asset allocation model to take some money off the table with bonds. Still ended up making money on that call, but we'll probably revisit that as we go. I mean, our model continues to update that, so we'll continue to keep you apprised of where that is. But now half of the bond position that we had, and those extra dollars go into cash at this point in time to just kind of wait and see how that plays out. Steve, I'm really reluctant to ask this because I think I know the answer. What are you watching next week?
Well, after Tuesday, I think we sort of watch the election returns. One reason I have optimism that it will not go as long as it did last time. Recall that Biden was actually declared president on Saturday after the election, is a lot of states have accelerated their ability to count the ballots earlier. I also think there are going to be fewer mail-in ballots this time compared to the pandemic. So it wouldn't surprise me if we have a call potentially as early as Wednesday, maybe by Thursday afternoon. The caveat there is two states that have not updated their ballot counting processes are Pennsylvania and Wisconsin. So if we're waiting on those two to decide it, it could take a while.
I mean, Come on, like of all, like you couldn't make it, Rhode Island? Like what? Why would it have to be those two? I
Well,
mean,
the honest answer is you have divided government, I think. So,
Jesus Christ. Neil, what are you watching?
Um, well, I guess I'll be watching the Fed, which meets on Thursday, which is a little unusual for them. Typically the Fed meeting decision is on a Wednesday, but at any rate, the market's looking for a 25 basis point rate cut. I think that's right. And I don't think we should expect much fireworks. So obviously, I think the Fed wants to keep their options open, but I do think that they should maintain a dovish bias, given what we're seeing in the job market. So that'll really be the main event. We'll also get preliminary data on consumer sentiment for November. And going forward, I mean, depending on how the election turns out, I mean that'll be something to keep an eye on because one of the things I mean, one of the one of the things that clearly happened after 2016 when Trump unexpectedly won was that you got the hopium in the sentiment data. Now, I wouldn't extrapolate that for the real economy, but you do get this sort of pickup in consumer sentiment, pickup in business sentiment, and because they have what they feel like is a friend now in the White House. So I think that I wouldn't put too much stock in that for what it means for the economy, but it is what it is. I mean, that's just how the data has behaved. And that's really it. We get ISM services before the Fed meeting. But really it's just all eyes on the Fed for us. And obviously we'll be watching the election just like everyone else.
On that point, do you think that the conference board, there was a spike, right, in forward expectations? Do you think that was in line with the expectation that Trump was going to win?
Well, I mean, the University of Michigan, I think, breaks it down with like Democrat, Republican, and there has been some improvement in Republican expectations, at least in the UMich survey. So,
It was just kind of out of wasn't it kind of odd? I felt like I don't follow that data that closely, but it was like a kind of a spike that seemed to be an outlier given the quiescence of the data. I don't know. Maybe I'm just
I
I
mean,
don't
we'll
know.
see. I don't know. I mean, I don't think you should, pay much attention to any. I mean, generally speaking, consumer confidence should be going up because
Yes.
gas prices have been coming down and because stock prices have been going up. So that's a reasonably good first pass for anything with respect to consumer spending, consumer confidence rather.
Well, and it should be good for inflation going forward, right? I mean, it's really if you want to draw the line, very simply, I get it, but if you want to draw the line between inflation and something, energy is not a bad place to start, in terms of understanding kind of what the trajectory is, and obviously, crude where it is certainly more helpful than not. Look, we're going to be watching this 5,700 level. Again, trends are still positive. Internal momentum has been weak, no doubt about that. We have seen I would say market evidence that the market believes Trump is going to win, though the betting markets have started to contract a little bit. We still continue to see more favorable positions and performance out of those names that are more Republican related. I don't even know if that's fair to say Republican related when it's Trump, but that's how we're at least viewing it from the market's message. 425 is this resistance level on the 10-year yield. We'll see. We've gotten through it, but we haven't been able to close above it. We're right at that zone. Again, continue to look at this as overbought in a downtrend. So probably needs to be after the election before we get through that or to the downside. But either way, still looks to us like 4% is the next support level with 360 as ultimate support on the downside. Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter for all the charts that we reference, and LinkedIn if you are so inclined. And also, you can join us on YouTube to see our smiling faces. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
and I'm Steve Pavlik.
We'll see you.